just fly too close to the sun.
Every time you come around, you know I can't say no. Every time the sun goes down, I let you take control. I can feel the paradise before my world implodes. And tonight has something wonderful. My bad habits, stay till late nights, sitting alone. Conversations with a stranger I barely know. Swearing this will be the last, but it probably won't. I got nothing left to lose, so you do my bad habits, stay to you. So do my bad habits. Bad habits, stay to you. So do my bad habits. Every pure intention ends when the good times start. Falling over everything to reach the first time spot. We started under neon lights and then it all got dark. I only know how to go too far. My bad habits, stay till late nights, sitting alone. Conversations with a stranger I barely know. Swearing this will be the last, but it probably won't. I got nothing left to lose, so you do my bad habits, stay too wide. I stare into space, and I know I lose control of the things that I say. I was looking for a way, and I can't escape. Nothing happens after two. It's true, my bad habits, stay to you.
Had a feeling that you called me to say you're sorry. Instead, you just said it's my mistake. Are you waging up a war for the sake of something to say when I'm trying not to play? And I what you gotta say about
wish I could say sorry, but I don't have much to say. You won't believe me anyway. I got a thing for causing arguments, but in my defense, I'm scared to walk away. And what I'm trying to say about me, I don't know me very well. If I'm acting like someone else, and what you got to say about us, don't you see that I'm real? If I'm acting like someone else.
Hello, everyone. Welcome. My name is Marom. For those who don't know me, I'm a director at Elucidate AI. And today we are going to be talking about AI's role in investing with our illustrious guest, Yossi. Welcome, Yossi.
Thanks, Maron. It's great to be here, bro.
So just a quick intro on Yossi. He would be way too shy to introduce himself, but he is an electrical engineer, and he spent quite a few years developing AI solutions for large corporates and SMEs before founding Alcatech. Alcatech is a tech company that provides AI-driven investment strategies to fund managers, both locally and abroad. There's, of course, quite a lot of nuance to that, and Yossi will take us through it as we progress through the webinar. And just a note on the webinar, I'd like to keep the session as interactive as possible. So we'll be launching some polls so for you guys to vote. And if there's any questions, please post them throughout. We'll either get to them through the session or at the end. And yeah, I think let's kick off. Yossi, very excited to have you here. And I think just to frame where AI fits in the investment world, it'd be great to get an understanding from you of what you think AI's role is in investing.
Sure, Maron. Thanks for the very kind intro. So as I'm sure most of the people on this call are already aware, AI is probably one of the hottest topics of today's times, other than maybe NFTs. But I think the reason AI is so hot, is because of the way it has disrupted so many industries. We're seeing huge adoption of AI across the globe, literally, and there countless unbelievable use cases for AI. Marom, and I'm sure you and your team at Elucidate can probably talk for hours on some of the successful use cases that you guys are implementing. But at the same time, and I want to preface with this by saying, I certainly believe that AI is not always the solution to every problem. Using AI simply for the sake of AI may not always be productive or even useful. But having said that, if we focus solely on the world of investments and maybe equity funds in particular, what we find are some truly startling statistics. There's a report that comes out, I think twice a year, by Standard & Poor's, or more commonly known as S&P, called the SPIVA report, which basically analyzes the performance of indices or benchmarks relative to active managers. And what the findings show is that of all the actively managed funds in South Africa, the majority of them have failed to beat their benchmark over the last 5 years. I'm talking like 60% of them have literally failed to outperform their benchmark. Even worse, over 90% of South African domiciled global funds are underperforming their benchmark as well. And maybe just to say that in another way, only 10% of South African fund managers that are managing global strategies have actually outperformed their benchmark. Now, that's quite shocking, and as you'll see in the report, and I'll post a link to the report in the chat for anyone who's interested to maybe do a bit of a deeper dive into the statistics. But you'll notice that this is a phenomenon that is not just specific to a certain time period, and nor is it unique to the South African market alone. It's true all over the world. And ultimately, I think there's many underlying reasons for this. Some are pointed to an information advantage that maybe fund managers used to have in the past, but no longer exists today, with the accessibility of the internet. Some are pointed to, the inability for fund managers to crunch and analyze the enormous volumes of data that are being produced daily. And some are pointed to the cognitive and behavioral biases that us as humans possess, which can negatively affect our objectivity. So the truth is, it's probably a combination of all of these reasons, but the bottom line is that active fund managers are just not achieving their objectives. So if you couple all of these problems that we're seeing in the industry together with the revolution of commoditized cloud computing, the vast amount of data, which has in reality never been easier to access, as well as some of the strengths that AI and machine learning can bring to the table, such as better screening, better forecasting, more diversification, reduced human biases, faster modeling, reduced costs, and the list goes on and on. All of a sudden it becomes quite an exciting space. And again, it's not to say that AI is the perfect solution to the problem, but to use AI as a tool with sound investment philosophies and principles does create for quite a promising opportunity. And I'm a firm believer that, combining the power of man and machine can be much greater than, man alone. And, I think those who don't embrace the advantages that machines can bring to the table, might find themselves, being left behind in the future.
Thank you, Yossi. Something that we often get as well is whether it's AI is going to solve everything or is it going to replace the people. I think it's important to frame it as a tool, that it doesn't mean AI alone or human alone, but for us it's people plus AI generally do lead to better results. And I guess just something along the trends, something that I've seen in my personal capacity, just around my personal acquaintances, that there's a pretty massive movement in capital from passive management. Just among my friends, a lot of them are moving towards investing in exchange traded funds or ETFs, instead of some of the larger investment managers that shall remain nameless in this webinar. And I just wanted to get a feel from you. What do you think of this trend? Does it make sense? And why are people sort of moving away from these sorts of investments?
Sure, so 100% agree, and I'm seeing that as well. We're seeing massive migration and movement towards passive funds like ETFs, like you mentioned, or index trackers, and I think for good reason. People are starting to finally realize that they can achieve the same type of returns that they were getting with their fund manager, if not better actually, and at a much lower fee. And this realization has actually caused like an all-out price war that's currently going on between the active managers and the passive ones. The traditional active managers, especially the 60% that are underperforming, have come under huge pressure to reduce their fees and make their offering, look attractive and competitive. The problem is, how low can these active managers actually reduce their fee structures given their massive overheads, which include high salaries, for teams of research and equity analysts, data feeds, etc. So yes, personally, I'm also like a big fan of the ETF movement, and I highly recommend, that investors look into them as well. But for those looking to outperform ETFs, I really believe investors should be doing a lot more of almost a due diligence, and research into fund managers to kind of pinpoint, are they actually delivering substantial value, or are they delivering, ETF type returns or worse? And, people shouldn't just be going with, the popular names out there, or, names that they see on billboards on a highway. They should really be doing a bit of a deeper dive into, the funds that they're looking to invest in.
Interesting. Maybe in terms of stats, like what are the kind of like, are there any like specific numbers of how people are moving about? And maybe it's worth opening it up to our audience as well.
Yeah, sure. It's a good question, and I'd love to open it up to the audience. Maybe we can do a quick poll and get feedback from the audience. Maybe let's do like a 30-second or a minute poll where we pose two questions. The first one that's going to pop up on your screen is, where's the majority of your investments? Are they in ETFs, unit trusts, or hedge funds? Do you pick stocks yourself? Or, alternatively, are you not sure? And then just a follow-on from that question is, are you actually happy, with the performance on your current investments? And, maybe we'll give it a minute for the audience to answer that question. It will be interesting to get the insights. But while maybe everyone gives thoughts to those two questions, I'll just touch on the answer. I know in the US in 2018, the total amount of assets that were in the passive space surpassed that which sits in the actively managed space. I think currently it sits at around 54% in the passive space in America. But this trend has been playing out for, I think, almost 12 years in America. So it's taken some time. Locally, of course, I think we're behind. I don't have exact numbers on me, but I think between 6 to 10% of the assets in South Africa sit in the passive space. it obviously takes, a while for trends to change, but the flows into passive are definitely increasing in South Africa. I think over the last 4 quarters, active managers saw net outflows, while passive managers saw net inflows. So this is a bit of an indication into where the market's going in its current form. But I mean, it'll be great to see the results of the poll just now, to see how where we are in terms of just the small sample size that we're going to be taking.
Okay, guys, I'm going to pull the poll down in a couple of seconds. So if you haven't voted, you can quickly vote now before I stop it.
Okay, great. Thanks, Dan.
All right, should we share the results now or keep everybody in suspense?
I think share.
Did you say, should I share it now?
Let's share them.
Okay, cool.
Okay, great. Very interesting statistics there. I mean, if we look at the first question, Marom, I mean, just mentioning the fact that, there's been a lot of outflows from the actively managed space, which, classifies under unit trusts and hedge funds there. 17% of the answers, I guess are quite in line with the statistics that we're showing. And it's nice to see guys actually investing for themselves and investing in more of the ETF structures because of, the benefits that we just mentioned, like reduced fees and I guess the possibility for outperformance. And it's nice to see that people are happy, Obviously, if no one's ever going to be super happy, I don't think, there's always better returns that you can get. But, the fact that the majority of the audience, are relatively happy with their performance is definitely a good sign. What do you think?
I think I'm very I guess positively surprised to see how many people are picking their own stocks. It's pretty amazing. That's the most popular answer. And back to what you say about happy with performance, like if you had to ask me, I would say yes, I'm happy, but would I be happier with an extra 2 or 3%? I'd be ecstatic about that. So I guess it's always like a moving target.
Yeah, for sure. Interesting that 17% they're not sure.
Yeah.
I guess. Okay, great.
Cool. Interesting. Okay, cool. That's very interesting on the trends. It's nice that it somewhat reflects some of the stats. And it seems that more people here are investing in passive versus the rest of South Africa. Seems like we're quite ahead in this demographic here in our poll. So Yossi, just to get a little bit specific, I think we've talked about some of the trends in the market, moves to passive and the performance of active managers. And we've also brought in our audience to see where they're at currently. And most of them seem to be pretty involved in the investment space, picking stocks for themselves, for example. But maybe you can tell me a little bit about your side. Where's your specific niche? Why did you found Alcatech? And what sort of role are you playing within the investment universe?
Sure. I mean, so the idea behind Alcatech actually began a couple of years ago. I remember sitting down one day to review some like small investments that I had with one of the prominent asset managers in South Africa. And I won't name and shame here either. But I remember clearly seeing that I'd made around, I think it was a net return of around 1.5% over 2.5 years that I was invested with them. And of course, I'd paid them a significant fee for it. So, I was quite utterly stunned by this and quite disappointed. So I definitely wasn't happy if I was taking that poll. But I really wanted to understand, if I just picked the wrong fund or a bad asset manager, or if other people were experiencing some of the same frustrations. And what I found were, all the statistics that we've just been speaking about, from an investor's perspective, I certainly realized that I wasn't the only one who was disappointed and frustrated, was found left overpaying and, looking for alternatives. And from a fund manager's perspective, I realized that, maybe rightly so, active managers were experiencing huge outflows and shrinking profit margins. So the problem has kind of been going both ways, and it's been a bit of a lose-lose situation at the moment. So it became quite apparent to me, that there is a bit of a gap in the market that no one seems to have really solved at this stage. And, given my passion for AI, together with my passion for investing, I find that Alcatech to really try and address this problem. And at our core, like you said, we are a tech company with a heavy focus on R&D, and we partner with fund managers to assist in developing their investment processes and trading strategies. And the goal is really to add substantial value to the end investor, the common man on the streets whose life can seriously be changed by adding a couple more % to their portfolio every year. And I really, really believe, that technology has the ability to do that if we can tap into it correctly. And, I really believe that, we could be at the forefront of that change.
Amazing. Okay. So I guess it's kind of what you're doing right now is kind of new age. And I think what we've seen also with our clients is that most are open to it. Some are somewhat reluctant. They don't yet understand that it's something new. But as a whole, I think in South Africa, we've seen pretty enthusiastic adoption. But specifically in your world, in the investing world, which is typically a lot more regulated and sometimes in its thinking, maybe not famous for being pushing the boundaries, sometimes potentially a bit more risk averse, as it maybe should be. I mean, they're managing people's monies, people's pensions. People are really dependent on them. So I guess from your side, have you seen what's sort of been the adoption you've seen from your clients or potential clients, and how are we doing versus the rest of the world?
So if you look at some of the world's most successful investment management firms like Renaissance Technologies, and by the way, there's a great book that came out that's on the founder, Jim Simons. The book's called The Man Who Solved the Market, and I'd highly recommend it to anyone interested in hedge funds and quantitative investing. It's just a fascinating book, and if you're into reading, I highly recommend maybe you get your hands on that. But if you look at, Renaissance Technologies and Two Sigma, popular firms in America, these guys have been relying heavily on technology and AI to build their investment processes for years. Fidelity Investments have recently come out saying that they've been hiring data scientists by the hundreds, more than CFAs. As of 2018, more than 50% of hedge funds in America came out saying that they're also using AI and machine learning to inform their investment decisions. So I think in more developed countries like America and maybe European markets, we're definitely seeing an upward trend in adoption of AI and machine learning across the asset management industry. But perhaps predictably even, South Africa is behind the curve, and we are yet to see massive adoption taking place. But interest is definitely on the rise. Guys are talking about it a lot more. We're seeing articles coming out, and even fund managers that I've been speaking to are starting to allocate, budget and resources to it. But I think, we still have a long way to go in this market.
I think so. It's it is pretty expected, I guess, that we're still a little bit behind, but I'm glad we're moving in the right direction. And I guess just in your space where there is huge volumes of data and many decisions to be made and lots large investment universe to monitor, it makes sense to use AI. That's really where it typically tends to excel. And I can say just from our experience that basically every company that has huge volumes of data is, at least in some respects, a tech company that should be utilizing AI. I'm wondering, I guess, in your space, when do you think it will actually be realized that they should all be tech companies, or if they even should? And when do you think that will become mainstream?
So I think, it's a good question, and, one I wish I had the answer to. Unfortunately, there have been a lot of horror stories, especially in the hedge fund space, of guys that have used like fancy quantitative techniques that ultimately did blow up. So, as soon as people, fund managers hear of some sort of, AI black box, they do tend to run away from it, but without necessarily understanding where some of the advantages may lie. So I believe a lot of education is still required. I think fund managers need to fundamentally understand how AI works. They need to be aware of the mistakes and pitfalls that their models, may possess. I think they need to hire the relevant people who are specialists in this field as well. And ultimately, they need to deeply understand how to integrate tech into an investment process correctly. Ultimately, people, but especially institutions, they want to see successful use cases, and proven track record. This industry is all about track record. And unfortunately, there's no real way to accelerate, your track record other than just building it. But having said that, I do think that within the next maybe 3 to 5 years, the asset management industry will look, very different to how it looks now. I completely share your view, that in the near future, every company will need to be a tech company in order to merely survive and compete. And I think asset managers will be no exception, to be honest. So, some of the guys like our partners or others who, share in this vision and who foresee, maybe where the future is going, and that are prepping for it and researching and, slowly building out a track record, I think they will be, quite well positioned for and when we do see, mass adoption taking place.
Yeah, I think once people see the sort of improved performance as a result, it will also create a bit more of an impetus in that direction. And I guess following that, maybe you could show us some of your own returns and your own strategies and how they've performed. I know you've got a few, but maybe 1 or 2.
Yeah, sure. So we've actually, like you said, we've got a whole collection of strategies, ranging from long only hedge strategies, local and global. Others are even a bit more niche, like focusing on the listed property sector or, pure ETF strategies. But maybe I'll take you through the performance of, 2 of our long only strategies. Let me pull up the slides. And if it's too small, I think if you're on your cell phone, you can feel free to zoom in. You should be able to pinch the screen, and you should be able to get a bit of a better view. But if we look at this first mandate or this first strategy, it's actually the first mandate that we created a couple of years ago. And it was the first one I allocated my initial capital to. It's a long only strategy focused on the top 60 stocks in South Africa. It's quite an aggressive strategy by nature in that it targets, superior returns, but it can be subject to high volatility as well. As you can see, our strategy has returned over 150%. And if we just go a bit more down, you'll be able to see the monthly returns as well. But, we've returned 150% since inception, relative to 20% that you would have received, having invested in the market. In essence, that's, 7 times the return you would have received if invested in the index, which has really been unbelievable. And we just had a really exceptional August month as well, which was nice to see. So that's, one of the examples in South Africa, long only. If we look to the US, a strategy which we launched in, I think it was February last year. So ironically, right before COVID, we went down with the market, but we recovered really nicely as well. Our returns are literally double or more than double what our benchmark has received or done. And our benchmark being the S&P 500 has actually been doing quite nicely over the last year and a half. So, it's all looking, very promising. In fact, I think each of the strategies that we've launched are outperforming their respective benchmarks since inception. But I always say this, but the beauty of technology is its scalability, and you'll understand this. So, as long as we have access to sufficient data in the relevant market in which I think, in which we would like to trade, we're pretty confident that, with the platform that we've developed together with the R&D process that we've put in place, that we have the tools to develop, as many strategies, as required according to, I guess the mandates that come in.
It's pretty amazing returns. It looks like on the SA one, you pretty much doubled what the market got, which is actually unbelievable. Makes me rethink some of my investment strategies. I guess from this, I know you mentioned some. You had a comment about a slightly more aggressive strategy, which has high volatility. And I think something important around that is that, at least from my experience, that when people hear the word algorithm or AI, they think it's quite scary. And I guess with something like investments, that's something that you generally want to know at least the mechanics, more or less, of how it works. But it would be great if, at least on a high level, without going too technical, if you could maybe just take us a little bit under the hood, explain how your strategy works, and just give us a very nice high-level understanding.
Yeah, sure. So, essentially, we deploy a whole, suite of algorithms in conjunction with high-powered computers to crunch, enormous amounts of data, which are, being fed through various data feeds that we have. And the objective is to ultimately exploit patterns in this data and make predictions against a predefined mandate and objective. Instead of precisely following rules that are coded by humans, which can often be classified into more traditional quant techniques, AI allows algorithms to self-adjust and to evolve with changing market conditions to ultimately, increase the accuracy of these predictions as more data comes in. In terms of, our approach, we've actually developed quite a conservative approach in nature in the way that we build our strategies, in that we're not high-frequency traders, nor do we trade complicated financial instruments or derivatives. Our outputs are actually quite simple. We're buying and selling specific liquid blue chip stocks with very specific weightings every 2 to 4 weeks on average. So there's quite a lot of complexity that sits at the back end, but at the front end, it's actually relatively straightforward. But maybe just to touch on, the scariness or the black box, of course, as with anyone, I think, involved in AI, one of the challenges is interpretability, the ability to explain why an AI algorithm came up with the output that it did. And I think this obstacle, is easier for certain machine learning methods like decision trees, but it does become more cumbersome for more complicated methods like neural networks, for example. And it's a problem, that AI in general faces, not just specifically for the asset management industry, but there is a fortune of research being done worldwide on this very topic. What we've internally spent quite a bit of time doing is focusing on risk mitigation. So applying certain measures to prevent things from going wrong, and we monitor, our models quite closely. And if something does, something does go wrong, we address it quite quickly. But my general push, is to say, that algorithms, definitely, make mistakes. They're certainly not foolproof, but on average, I definitely believe that algorithms have the ability to outperform humans by a long shot, as you can see with our performance.
I think it's pretty interesting that in the market, typically humans are held to a different standard to algorithms in a sense. Sometimes we don't always understand why humans make a decision. Sometimes they'll try to reason it after, but it's not necessarily always an exact logical reasoning to a conclusion. So I always find this sort of thing interesting. And I guess from our experience, it makes more sense to use sort of interpretability methods that you can use. I guess it's harder with neural networks, and as you go more advanced, it does make it a bit more difficult. But a lot of the algorithms are fairly interpretable with a little bit of work. But as I said, it's I think definitely held to a different standard. And I guess just I think you've taken us a lot through where the market is, how you operate, and a little bit about your own strategies. I'm wondering what's sort of next for you. Where you're taking Alkatech next?
So, ultimately we're on a mission to reinvent how active managers make their investment decisions. We fully focus on what we think we want to do best, which is, using the latest advancements in AI and technology to drive investment decision making. So, we've partnered with various asset managers who, have the infrastructure and client base and licensing and compliance to roll out and execute on those strategies. But I always say, we've only really touched the tip of the iceberg in terms of what we want to achieve. There's so many facets of AI, from machine learning to deep learning to natural language processing to image recognition. And there's so many types of data sets and alternative data sets that can be tapped into. Gone are the days where algorithms could only process, structured numerical data, satellite imagery, news articles, Elon Musk tweets even, all of this data can be used to extract insights, to identify opportunities and to forecast better. So, and I haven't even mentioned, other asset classes like commodities and Forex. And obviously, with all the crypto hype at the moment, we've been receiving quite a lot of interest for crypto strategies as well. So the scope and possibilities, are endless. And, I hope that by focusing our efforts, we can, try reinvent the investment industry to some extent and to ultimately, deliver substantial value to the investor. I mean, that's our goal, yeah.
Amazing. Yeah, it's there's a lot of data out there for exploring for what you're doing, and I'm personally very curious to see what you get out of the Elon Musk tweets. Um, uh, I think you've taken us through quite a lot, and I see we've tried to work in some questions, but I'll try also add one or two from the crowd here. So the first question, do you see the use of AI leveraging the ability to leverage more value for novelists, not traditionally in finance, especially for young entrepreneurs who can use open source software to create products? If so, what do you think the challenges are for young AI guys looking to use it in finance?
I think it's a good question, and I think this question is touching on, when to use AI, and touching on the point that I mentioned initially, which was, that AI isn't, necessarily a solution for every single problem. And I like to kind of categorize it into, 3 or 4 considerations. The first being, does the problem have large amounts of data? Because ultimately, the more data that is being fed into algorithms, the better, and the more accurate it can become. So the first thing I'd look at, is the quantity of data that the problem has. The second thing that I would look at, in whether it's in finance or any industry really, is, are logical rules and equations too complicated? So think about, speech recognition or facial recognition, where there would be the rules, to create, a speech or facial recognition algorithm would be too complicated if they were to be defined. The third thing I would look at, is, are the rules constantly changing? Is the market constantly changing? So think about fraud detection, where, fraudsters continuously change their behavior. So to apply a rule to something like that would be quite complicated. And I guess the fourth step, and it's kind of interchanged with the third one, is the environment or underlying data changing? And does it require a system to continually adapt? And this is where, trading financial markets or demand forecasting could apply. And, AI has the ability to kind of mitigate a lot of not the risks, but the rules, or it enhances the rules and the effectiveness of the problem being solved. So that's kind of how I would categorize the question. But I mean, Myron, I'm going to be curious to hear from your side how you would address that question.
So I guess from my side, I think the question comes from an AI practitioner trying to see if they can use their skills to do something like Alcatech on maybe a smaller level. I guess just from my experience, usually having some sort of domain expertise is a huge help. So understanding investments is just as important as understanding the AI component. What do you think?
Yeah, 100%. And I mean, I started off from a tech background as well. Not really a specialist in the investment space, and we've learned a fortune, about the actual problem that we're trying to tackle. We've spent countless hours, with fund managers and investment managers, understanding the problems, understanding their existing processes. Because if you don't understand, an existing process, how can you change it and how can you make it better? So I completely agree with you there. Yeah, share your sentiments.
Yossi, how easy is it to transfer from one strategy, for example, the SA strategy you shared, to a different strategy, a US strategy, where it's different data and different markets?
So what we've done, and we actually started off with having like a specific script, that was focused on one strategy, the South African market. What we've subsequently developed over the last 2 years is actually a platform that can quickly, develop, and because ultimately this process is a lot about trial and error and testing different techniques and different parameters, different feature engineering, different data manipulations, different investable universe, the list goes on, and we created a platform that allows us to test these strategies very, very quickly and compare them against each other to ultimately assess, if our strategy is in line with what we're trying to achieve. So because we've developed this system, which has a lot more complexity on the back end in terms of the scripting and the machine learning and AI, but there's a great front end that allows us to quickly iterate and basically tap into, different markets by, as long as we have access to the data, we can pretty much create strategies. So when we launched the US strategy, in Feb last year, there was not nearly as much work to get that strategy as there was when we developed the platform, or the first South African strategy. And, we're working on, like I said, more niche strategies now, like focusing on the listed property space, or actually it's almost like an actively managed passive strategy where the investable universe is ETFs. And in America, there's a great universe of ETFs that one could trade, but actively choosing them. So kind of like an actively managed passive fund. And there's some great stuff in the pipeline that we're looking, and, things are looking, promising.
Amazing. And Yossi, how could we as individuals invest in AI-driven fund and get these kinds of returns?
So unfortunately, at the moment, there's no direct way to invest in our strategies. We're currently only providing our strategies to asset managers, not directly to investors. But we are looking at more of a retail play, and there may be some options in the near future. So all I can say really is, like, feel free to reach out to me, and we can try to keep you updated as and when we do have some sort of retail product. But at the moment, unfortunately, it is more of a B2B targeting asset managers and trying to change the process from an internal perspective as opposed to external.
Fantastic. Yossi, thank you so much for your time. Everyone who's here been listening, appreciate your time. And if you have any other questions, Yossi's email's here in the chat. I've also posted the Elucidate email here. Please feel free to reach out with any questions, any thoughts, feedback, anything. You'll be surprised how quickly we reply.
Great, Myron, thanks so much for your time, and thanks everyone for joining. Again, feel free to reach out, always passionate about this topic, so always keen to have another conversation.
Thanks, everyone. And thank you, Dan, for hosting.
Thanks, Dan. Cheers, guys.
Cheers, everyone. Bye.
We get almost every night when that moon is big and bright. It's a supernatural delight. Everybody's dancing in the moonlight, dancing in the moonlight. Everybody's feeling warm and bright. It's such a fine natural sight. Everybody's dancing in the moonlight, dancing in the moonlight. Everybody's feeling warm and bright. It's such a fine natural sight. Everybody's dancing in the moonlight. Dancing